Today on the podcast, I have a very special guest, a mortgage broker in London, Ontario named Spencer Murray, someone I've worked with a lot over the years, someone that's helped a lot of my clients. So I said, hey, let's get Spencer on the podcast and he can share his expertise as well. Spencer, can you introduce yourself for the podcast guest? I think you've been on before. You may be one of the only returning guests here on the podcast, but we're in 2024 now, so we need to update everybody.
Fair. Yeah, thanks for having me. As you mentioned, my name is Spencer Murray. I'm a mortgage broker here in London, Ontario, with Indi Mortgage. We recently did a new rebrand from our old brokerage name, and excited to support the fresh brand.
Nice. Well, welcome to the podcast, Spencer. I think, one of the reasons I really wanted to have you on the podcast is because I've been getting a lot of interest rate questions, a lot of mortgage questions. And I always say, hey, I'm not the mortgage expert here. I do know a little bit because I've done this for a while now, but I do say always talk to the mortgage expert, someone like yourself who can kind of guide them through the process. So, my first question is that interest rate reduction just happened this month. I'm curious on what your thoughts are. Has it had any impact at all? Will it have an impact? What are you seeing right now in the market?
Yes and no. It has changed some things, but it hasn't. I don't think it's had the impact that everybody's expected it to. The thing with the Bank of Canada rate announcement and their overnight lending rate is it tends to, it only impacts variable rate mortgages and doesn't necessarily impact fixed rate mortgages. So they tend to be more independent of each other than dependent on each other. So anybody who has a variable rate mortgage, they would have most likely noticed maybe a decrease in their payment, and a decrease in their rate. But overall, it hasn't really impacted affordability, as maximum purchase prices for clients and borrowers is based off of kind of lowest rate. And right now, lowest rates are fixed rates, whether they're 3 or 5 years. That's the best way to maximize purchase price.
Okay, so if you're on a variable rate mortgage, you're going to be a little happy because your payment went down. But in terms of qualifying people, you're probably not going to see a massive difference yet. I mean, the trend seems to be, hopefully, that those are going to continue going down over the next couple of years. This is where I ask you to get your crystal ball ready, Spencer, and tell me, what is going to happen with the market. I get asked this question at least a few times a week, and I always say I don't have that magical crystal ball yet. But I'm curious, what do you think happens with interest rates in the market as we move forward into the second half of 2024?
Well, it's tough to say. Because I feel like every single economic report that comes out, whether it's Canadian based or US based, tends to kind of alter the path of where these rates might be going. There was an inflation report that just recently came out stating that inflation is up a bit higher than they intended, which kind of going forward or looking forward may keep any further interest rate reductions to a minimum. So I believe the anticipation was maybe in July, maybe in September, October, there was going to be a couple other variable rate decreases. However, given that the recent inflation report, I have a good feeling that those rate decreases might be pushed out to later in 2024, if not the beginning of 2025.
Interesting. Yeah. So, I mean, I think I've seen this year been a bit interesting. The spring market was really quite busy, I found. Last spring market was also kind of busy, but this one I think is definitely a little busier. I think one of the things that's nice to report to some of my clients, maybe not all of my clients, but most of their house prices have seemed to be trending up over the last year. If you look at it last fall, compared to the spring. I mean, I was selling things at a higher price that I would have recommended in the fall. Hard to say. I mean, it depends on the house. It depends on the neighborhood, of course, all those things. One of the things I always say with working with a mortgage broker like yourself is that I'm not as fearful of the deal, right? So when someone works with someone like yourself, and we've had lots of clients work together, I find that I'm a lot more comfortable that when you say, yes, you're going to get a mortgage, that you're actually going to get a mortgage and you're going to close today. I have a lot of, closings coming up over the next few weeks, just because of the way the spring market works and kind of 60-day closings. And I don't really have that heart attack that I think maybe I did early on in my career, when maybe I didn't have the same amount of expertise in my corner, or they maybe someone just used their own mortgage person that they met before. So, one of the things I'm noticing more and more is that a lot of my clients are doing contract work, or they're doing, I guess they call it like gig work, different jobs. Maybe they have two jobs, maybe they have a full-time job and a part-time job, just because of the way that the cost of living has gone up for a lot of people. What is important, I think, for these people? Can they qualify for a mortgage? How long do they need to qualify for a mortgage if you're in, not a permanent full-time government job like some people were in the past?
Yeah, so people who are in this type of work, contract work, or wouldn't be necessarily maybe it is guaranteed hours, but not full time guaranteed hours, or kind of be piecework in a sense. We can get mortgages for these borrowers or for these individuals. We just need to have a little bit more due diligence. Bit more due diligence needs to be done, in the sense that the lenders want to see a bit of a longer tenure, ideally 2 years, and we would average out a 2-year income for these individuals in order to use that on a mortgage application. Reason that the lenders want to see this is they want to be able to show the consistency of the income, given it's potentially earned in separate pieces. So ideally, it's always best to have a solid 2-year previous income of the same job, ideally same industry. Doesn't necessarily have to be the same employer, but as long as it's same job, same industry, and there's a bit of a flow to it, then the lenders are typically on board.
Okay, so if someone's coming to you and you're saying this is what I can do to help you, is there a cost to using a mortgage broker? I always get this question as well. Is it something that they have to consider, fees and this thing adding up, and how is that affecting kind of your situation?
Typically, there's not any fees involved. It just depends on the type of mortgage and where that mortgage is being placed, or what kind of lender that mortgage is being placed with. If we were to put a borrower in with a prime or an A lender, or an alternative B lender, then there isn't a broker fee involved. If, for instance, a borrower has bruised credit, or the income might not be as strong, or essentially, if we have to take them to a mortgage investment company, or a MIC, or a private lender, then that's when a broker fee would be charged.
So yeah, it's kind of a second opinion as well, I think, sometimes for people as well, to make sure that they can get they can see their options before they kind of get into that situation.
Absolutely.
I've had lots of clients in these situations. We just made a post the other day about how I've worked with price points of 200 and something thousand this year, which is crazy, all the way to, well over $1 million this year in the London area. And what I like about that is I get to work with different people. Sometimes they're first-time home buyers, sometimes they're downsizing. Some people, maybe you don't like this, but some people don't have mortgages at all anymore, right? Because they've already, bought and sold several times. But, I think that's kind of a cool part of our business, is you get to help different people in different walks of life, different financial situations, and just learn about, what questions you would ask a first-time home buyer versus someone that's done this, 10 times, or maybe an investor or something like that. So I'm curious on, maybe someone hasn't done this for a while, or they're a first time home buyer. What should someone get ready if they want to, before they talk to you, or maybe as they're talking to you, if they really want to qualify for a mortgage and buy a house this year?
I would say plan ahead. As you and I were joking earlier, do your taxes. Um, I mean, it pains me to say, but it's true. Um, no, but definitely plan ahead. If you can get on it sooner rather than later, then that's better. If anything, it doesn't hurt to kind of get ahead of it, in the sense that, I've had conversations with clients in the past where um, all of a sudden a house comes up, they want to purchase now. We dive into the application, and then we realize that there are some hurdles that we need to overcome, whether that hurdle might be inconsistent income, or it might be credit, or it might be a high debt load. Um, I take a look at all that, and then from there, I can make recommendations on, okay, how can we improve borrower's situation in order to A, maximize their income, but B, also put them in a position to purchase. So, for example, first time home buyers, it's typically a double-edged sword. Do I save for down payment, or do I pay off debt? Right? So, I can always take a look and do that, or it might be a matter of doing a bit of credit repair. Have there been hiccups in the past that need to be fixed, and who knows, maybe it's a fix that will be resolved in 2 months, 3 months, or it might be 6 months. The biggest example I have is a previous client who came back to me after a year and a half, and he said, "Hey, listen, I did all the things you told me to." He said, I sold my car, so I have a lower car payment. He's like, I have an extra $20,000 to put down, and I got a raise at my job. So I was like, man, you did
Nice.
everything perfectly, and within 4 months, we got him into a home. So
So after they go through that process and they have that, maybe they purchase a home, right, and they have that approval in their hands, what's your advice between that time and when they close? Because I know there's some funny videos going around of someone driving up in an Escalade at the closing and realizing that you're completely effed. I won't use the word, but you're in a big trouble. Then I'm curious on what is your advice there, and I do always kind of reiterate what you say on this, Spencer.
yeah, I mean, I could give you a laundry list, but to name a few, don't go out and get a new car lease. Don't add any recurring debts. Try and keep any of your credit card payments and credit card spending to a minimum. Um, Try to keep any other credit inquiries to a minimum as well. I mean, technically, the lenders do have the right to repo credit up until the day before closing, and they could do that, find out that there's more debts, and then all of a sudden the mortgage doesn't debt service, and they have to pull funding. Again, not ideal. I haven't seen it happen, but it's a possibility. So the other big one too is don't go out and buy a whole bunch of furniture. Wait until get the house first. Get the house first, and then go ahead and do everything else. So that would be the big one with regards to credit and debts. Don't change jobs. Don't quit your job, right? Because even though we might be file complete with the lender, and if they find out I you don't have any income to support the mortgage, then you know
Yeah.
you're SOL.
Yeah, I mean, and it's interesting to me because you get in these situations where you buy the house and then it does happen to people, and I will warn people, you buy the house and then you want to buy the car that goes with the house in the neighborhood, and maybe the couch that fits that room perfectly. And I do see it all the time where, oh, just put it on the store credit card, and then that creates a whole other credit issue for you. And also, the other thing I'd give it as advice, just general advice, is like when you move into a house, sometimes you don't actually know what you need right away, and your priority list might change. I know when we moved, it was the same thing, and I kind of got in a situation where I said, oh, well, maybe I want to do this first, right? And then obviously yeah, we spent some money
Yeah,
relatively quickly on some things that we would have thought we could live with for years, and then other things move down the priority list, right? So you don't have to do everything at once. I think some people that get their head around that have trouble because they're trying to buy the Lexus at the same time they're moving to the new neighborhood, and then they're also buying the nicest couch they can get, and it can get really problematic really quickly. And I've seen that before over and over and over again. So like I said kind of earlier in the podcast as well, I think this is why you want to have a mortgage expert like yourself. And the reason we met because one of our mutual clients was working together, and I had no idea who you were, you had no idea who I was, and then we kind of met through that process, right? And I think what I liked is that it was always, you tell them they're approved and they're actually approved, which I know sounds crazy, but I've been in situations where someone walks in, and I won't name names, but someone walks into a certain establishment and they are told, yeah, you're good to go up to a certain price point. And then, 3 weeks away from close, oh, we need this document, this document, this document, this
Mm-hmm.
document, and they don't have it, or they weren't told something and they can't close. And then the person that isn't working past 5 o'clock has trouble with that situation and can't solve it. And then the superhero comes in like yourself and, has to solve a problem. What I'd prefer is that they just talk to you in the first place, or talk to someone of your caliber, and obviously have a situation where they can get that approval and that check mark, and then we know we're going to close on time. So it gives me, I have enough heart attacks already in my life, and I think if I can avoid that one, that would be good. So that all being said, I mean, that's my kind of hurrah for someone like yourself, Spencer, and you've been awesome. Curious on, do you have a way that people can get a hold of you in an easy way? What's the best way to kind of start if someone's looking at maybe making a move or buying their first house?
Yeah, I'm out there on the socials, but email and phone calls tend to work best. You can get a hold of me at spencer.murray@indimortgage.ca. That's INDI mortgage.ca. And my cell phone number is 519-719-4565. So those tend to be the
Nice.
best.
Okay. And
Yeah.
do you recommend that people fill out an application if possible, like on your website, or what's the best kind of course of action there?
Yeah, usually I'll touch base with a client just to kind of get a sense of where they're at and what their plans are and where they want to be. Obviously, if they're talking to me, then they're looking for a mortgage or they're looking to get into a home. But once I touch base, we'll just kind of have a quick initial conversation. I'll explain the process. And then from there, I'll have the clients fill out my online application, send it back to me. It's fairly straightforward. The program allows clients to upload documents right away. And I mean, as long as I have everything in front of me, if I have all the information and I can confirm the information from the documents, I can turn stuff around pretty quickly. So help me help you in the sense that, I want to get this done for you as efficiently as possible.
Nice. Okay. So that's awesome. Thanks so much for coming on the podcast, Spencer. Again, my name is Phil Bailey. I'm a real estate agent in London with the HouseSigma team. You can just text me, probably the easiest way to get a hold of me. Try not to sell me anything because I've had a few of those lately, but I'm here to help is what I'll say. My number is 226-977-2348, or you can just go to my website, www.philbailey.ca. Check out past reviews from clients. I will have a link to all of the past podcast episodes, including this one. So we'll have audio versions of the podcast that are available on things like Spotify, Apple Music. If you can send a little review on those, that would be awesome, or share them, that would be great. Also, YouTube, we're putting these all on YouTube as well. Now I'm in full video, full 3D for all of you. Spencer agreed to come on video with me today. So we're both work from home people, I think, a lot, but I have this beautiful background here and some new lights. So hopefully I look as pretty as you think I do in my audio version. I will wish you all a wonderful day. And if you have any questions, just please reach out to myself. If you have mortgage questions, reach out to Spencer, and we're both here to help. Hope you have a wonderful day. Thanks for listening.
Thanks, Phil.